November 2024 kicks off with a series of events set to create significant market turbulence within the first week alone. This whirlwind of the potentially market-moving factors begins on Friday, November 1st, and culminates with the U.S. presidential election on November 5th. The Fed Reserve's rate decision to be announced on November 7th will be the icing on the cake. Given this lineup, leading currencies are in for a turbulent ride. Let's take a look at the market shifting economic report scheduled for November 1st. We are watching traders' calendar. The US dollar may strengthen its early Friday trading amid weakness in antibody currencies. Australia's manufacturing PMI is expected to dip to 46.6 in October, marking the ninth consecutive month of a contraction. A reversal of this trend seems unlikely. Adding to the bearish outlook, Australia's producer price index is forecast to drop to 3.9%. A decline from a 4.8%, which marked the highest increase in over a year, could pave the way for further interest rate cuts by the Reserve Bank of Australia, thus pressuring the Australian dollar. China's manufacturing PMI, which is projected to rise to 49.7, could stabilize the Australian dollar, often used as a liquid proxy for the yuan. A rebound in China's PMI could have broader positive implication for global markets, given its previous drop to the lowest level since July 2023. Russia's S&P Global Manufacturing PMI is expected to fall to 49.2, with the Russian central bank recently raising its already high interest rate from 19 to 21%. A slowdown in the manufacturing activity is likely to add to pressure on the ruble. The S&P Global UK manufacturing PMI is expected to fall to 50.3, which could send the British pound into bearish territory while supporting the US dollar. The spotlight falls on the US jobs data. NONFARM payrolls for October are expected to range between 111,000 and 180,000 jobs, still below September's peak of 254,000. Signs of a softer labor market will likely reinforce expectations for another interest rate cut by the Fed Reserve, thus weighing on the greenback. Particular attention will be on the unemployment rate. Historically, a ruling party has never won a US election with a rising unemployment. A potential increase from a 4.1% could favor Trump, whose presidential program is seen as inflationary and supportive of the dollar. Friday afternoon brings a closely watched set of US manufacturing data released within a tight 15-minute window. Both S&P Global and the Institute for Supply Management are forecasting an uptick in the manufacturing activity. According to S&P Global, the US manufacturing PMI is expected to rise by 0.5 point to 47.8. The icing manufacturing PMI is projected to rise by 0.4 points to 47.6. With this in mind, the US dollar has every chance of ending Friday and the entire month of October on a high note. Data release times in our video review are set in GMT plus 3 time. The next video review of traders' calendar will be released on Monday, November 4. Subscribe to our channel and follow news with us. We will follow the above-mentioned reports on our channel. We wish you profitable trades and see you soon.